Bitcoin's price has dropped down to $56,500 just before the Fed FOMC decision on interest rates. In today's video, I'm going to be breaking down what the expectation is and what I believe the outcome will be, and of course, what that means for Bitcoin's price. Let's get into it. So all eyes are on the Federal Reserve, whether they increase their interest rates or not. This has a huge effect not only to the crypto market, but also the stock market. And what we've seen so far is lots of fears over whether or not the interest rates will get hiked. And of course, we'll see more of a sell-off when it comes to risk on assets. Now, we have seen Bitcoin slipping down quite aggressively most recently. And, this still, in my opinion, is actually a pretty reasonable, healthy correction for BTC after such a significant surge to the upside. Now, the FOMC for the month of May is today. It's going to happen a little bit after this video has gone out. And my expectations, just like the kind of broader market, is to assume no real change. I'm expecting the Fed to continue pausing interest rates. And that, in my opinion, will actually have a more bullish effect on the market rather than a negative one. But let's take a look at this article and take a look at what's going on. Markets are anticipating a net zero chance that the Federal Open Market Committee, the central bank's policy setting arm, will announce any change to interest rates. Essentially, the market is expecting no change. They just think it'd be another pause for a little bit longer. The only piece of news likely to come out of today's meeting itself is an announcement that the Fed will soon reduce the level at which it is running down the bond holdings on its balance sheet. So let's take a look a little bit deeper here for what is going on when it comes to the Federal Reserve, right? Because they are basically trying to turn the dial just a little bit to combat inflation, right? And the inflation over in the US has been rather stubborn, right? It has risen concerns about where the policy is heading, and the Federal Reserve has been, really quite, I guess, hawkish, just kind of, seeing how things are by pausing interest rates rather than actually giving them the necessary hikes. Now, it isn't anything new on the channel. We've been talking about this for quite some time. We do feel that the US should have handled this by now by increasing those interest rates when they had the chance back in 2022 a little bit more aggressively than they did. They did a lot of 0.25s instead of 0.5s. And it has, unfortunately, I think, had a bit of a knock-on effect with that stubborn inflation over in the US. Now, markets, as I said earlier, are anticipating a near zero chance that the Fed will essentially increase rates. They think that actually there's a really high probability that it will be paused, and I totally align with that. Although I do think the right thing to do would actually be to increase interest rates. Okay, I do think that is the right thing to do, but I don't think that's what the Fed will be doing. I think the Fed will continue to pause, because there are a lot of knock-on effects. If they cut rates, there's going to be a knock-on effect there. And if they raise their rates higher, there's also going to be a knock-on effect there as well. Specifically at the regional banks, which obviously we were talking about in January and February when it comes to the banking crisis over in the US. And we obviously just saw a new bank go under over in the US. Again, none of this is new, because the banks basically do have a lot of bonds. And as interest rates go up, the bonds become less valuable. And they got a lot of bonds on their balance sheets that are actually causing them a lot of headaches. So I think if interest rates do go up higher, it's going to create even more of an issue at the banking level, at least regional banking rather than centralized banking. So I do think that we're going to see a pause, okay, because I don't think they can really go up the way that they need to. But there is a small percentage chance that maybe they do what is required and actually go ahead and increase the interest rates. So when it comes to the unwinding of QT, basically the total holdings is about 1.5, has reduced by 1.5 trillion. Okay, and the central bank has been allowing up to 95 billion in maturing treasury and mortgage-backed securities roll off each month. And so there's going to be a little bit of maybe an announcement about that as to whether they continue to do that or whether they cut that in half as discussed previously. So a lot of interesting things going on here. But I guess the main thing that you guys are really interested in is what's my thoughts and opinions on the price action of Bitcoin on the back of the FOMC. And well, let's load up Bitcoin's chart and take a a look. Okay, so here we can see the Bitcoin did move back down, right? It came down towards our target area, but it hasn't hit it yet. So I'm expecting some volatility. I do think we're likely to see a wick down into our targeted range between 53,700 and 56,400, right? At the moment, we came down 56,552. So we get very, very close to our targeted range as per the video that I put out this morning and yet a couple of days ago and so forth. You can go back at the channel and take a look. Our targeted range here. Now, this range, this yellow box range, is in line with being above our 200-day exponential moving average. Now, if interest rates pause, I would see that as a bullish tell, and we should be looking for a progression back to the upside. Because what it'll tell the markets that essentially there isn't anything different now than there was, for the last 4-5 months or so. Okay, it's going to basically tell the market that actually, yeah, we're okay for another period of time. We can potentially play with these risk-on assets for a little bit longer. If, however, interest rates do go ahead and climb, then my expectations are that we're going to see more of an aggressive move to the downside. And it might be that we come down a little bit, we hit the 200 EMA, we bounce a little bit, and then we lose the 200-day EMA. And if we do lose that 200-day EMA, that is going to be even more problematic for BTC's price action on a slightly longer term. Okay, now I've been talking about keeping and holding above the 200-day exponential moving average. And if we do stay above it, then we're going to be in a reasonably strong position. I do not believe that the Fed are going to increase their interest rates or decrease their interest rates, not at this stage. I think it will be a pause, and that pause will be a positive on the Bitcoin price action, and we should see a bit of progression to the upside. I wouldn't be surprised if we see price moving back towards $70,000, as I have indicated with this yellow box area right here on the chart. So that my expectations will be that it will be a pause, and it should be anything other than a pause, then do expect to see Bitcoin really pushing down more aggressively, and I think we're going to see a lot of money coming out of the market. And we've said it before and we'll say it again, and we've seen it, of course, with over $344 million flowing out of the Bitcoin spot ETFs. The Bitcoin spot ETFs are going to be the first things to get spooked. It's why we've seen these outflows that we have done at the moment. Okay, they're not as safe as maybe we'd like them to think. Stock market money is different to crypto degen money. Okay, essentially what we've got is stock market money playing with Bitcoin spot ETF shares, which does directly affect the BTC based on its one-to-one backing held by, people like BlackRock, for example. So it's important that we understand that if the stock market gets spooked, Bitcoin is going to get spooked. And if Bitcoin gets spooked and we start to see them pull to the downside with BTC, then it's no surprise that the altcoins will bleed out as well. Okay, so a lot is riding on the line here. Not just billions and billions and billions, but we're probably talking, a fair chunk of cash, hundreds of billions of dollars on the line. So are the Fed likely to actually toy with that? Are they going to push the interest rates higher or lower? I don't think that's going to happen just yet. I think it will be a pause, and I think Bitcoin's price will react positively. But you can let me know what your thoughts are in the comments down below, whether you align with my thinking on this one or not. In terms of the price action of Bitcoin, like I said, I will be looking for us to fill out this area between 53,700 and 56,400, and then be looking for the moves to the upside. As with every FMOC meeting, guys, there's always a lot of volatility. It's not really the one to be trading unless you are completely degen and you're just going in with a bit of leverage for a bit of fun. Of course, there's a lot of money to be made on the extreme volatility that comes from the FMOC meetings. But me, I'd much rather wait to see how the dust settles and then make a more strategic play from there. But again, guys, I am no financial advisor and I cannot offer you financial advice. All I can do is offer my thoughts and opinions on the data in the charts and in the news as I personally see it. You can let me know what your thoughts are in the comments down below. And if you're looking for a bit more about Bitcoin, you should probably check out this video right here.